Hello, and welcome to this presentation about recession trading strategies. My name is Valerie Fox, and I'm excited to share my top 3 tips for making money during a recession. For those of you who don't know me, I've been trading and coaching traders for over a decade. Ultimately, I help traders get better results, and I'm able to do this by determining where they are in what I call the 4 stages of trading, identifying what to focus on in order to get to that next level of performance, and also teaching the disciplines to achieve long-term success in trading. Also, I'm the author of the Self-Reliant Trader Method book, where I go into detail about all of this and more. My website is www.tradefocus.com if you'd like more information. So let's dive right into today's topic, my top 3 tips for making money during a recession. The overarching theme for making money in a recession, or really for trading in any market environment, in my opinion, is to focus on what you can control. Trading is all about probabilities over time. It's not about prediction. It's not about being right. It's not about beating the market. And it's not about winning every single trade. It's about having an edge that makes money over time and over a series of trades. It's about mitigating losses and locking in profits. It's about trading without emotions. It's about trading in an objective, sustainable, and repeatable way. So here are my top 3 tips for controlling what you can control with your trading. And this applies to trading in any market and in any environment, but also becomes especially important when trading during a recession. Tip number 1, control what you trade. One of the many things you have control over with your trading is what you trade. Whether we're in a recession or not, you get to decide which market you trade. Do you trade stocks, futures, options, forex, crypto, or something else? And even within your market, you get to decide what you will specifically trade. So you must decide how you're going to determine what you trade. Maybe you already have this figured out, or maybe you don't. You should think about what you're trading today and how those instruments perform in a recession. Some questions you may want to ask yourself: are they even tradable during a recession? Do they become more or less volatile during a recession? Does the strategy in general, i.e. your trading edge or how you identify your trades, still perform well during a recession? Can you trade your financial instruments in both directions, or do you need to wait until they are on the rise again? Should you consider other markets or financial instruments during a recession? That's the ultimate question here. So what I'm saying is you should never feel handcuffed if your market or financial instrument of choice in a quote unquote normal market environment does not perform well during a recession. There are always other markets to trade, and there are markets like forex, for example, that can be traded in both directions, up and down, buying and selling. So, take inventory in what you trade today, whether it's tradable during a recession, what modifications might need to be made to your strategy during a recession, and or if you should consider layering in another or a different market to trade, like forex, for example, when the one directional or broader markets are pulling back. Tip number 2, control how much you risk. Another component you have control over with your trading is how much you risk. Again, this is true in a recession and also when we're not in a recession. You always have control over how much money you put on the line, period. So during a recession, if what you trade tends to be less reliable, more volatile, less liquid, or if you find your emotions creeping up to the surface and impacting your decision making, then you should consider scaling back how much you risk. Yes, I know the whole point of trading is to make money, so the idea of scaling back and trading smaller position sizes seems a bit counterintuitive. However, you must protect your money first and grow it second. It's easier to make more money and to grow your account more quickly when your losses and drawdowns are smaller. So if a recession or any time of year you're experiencing a bigger drawdown than normal, keep this in mind. Don't let a recession or a period of drawdown wipe out all the profits you've made. Be mindful to strategically manage your risk, especially during a recession. You always get to control how much you risk per trade by using a stop and having an exit strategy in the event the trade goes against you. Remember, we're in the business of probabilities, not in the business of prediction. So you never know which way a trade will go. And it's always important to use a stop and to have an exit strategy when or if the trade goes against you. So now is a great time to revisit your maximum risk per trade strategy to make sure you're not over leveraged during a recession. Additionally, you should make sure you have a maximum risk threshold per correlated instrument and a maximum overall risk threshold for all active trades and for each month. So think about if you have those documented and defined today, and if not, now is the perfect time to do that. Again, risk per trade, max risk per correlated instrument, and then a maximum risk overall for all active trades and for each month. Ultimately, these are your ultimate drawdowns that you allow yourself to have before pulling back even further. So this is going to ensure that you mitigate losses during times of extreme uncertainty or unpredicted volatility, like what can happen during a recession. Tip number 3, control how you trade. The final tip I'll share with you today about how to make money during a recession is to control how you trade. Specifically, make sure you're focused on a single strategy, using a documented trade plan, and following through with operational excellence. I'll say it again, but this tip is applicable and vital not only during a recession, but every single day in trading. One of my favorite quotes is, "Consistent execution will yield consistent results." So you should ask yourself, are you operating in a consistent way with your trading? Are you identifying trades the same way every time? Are you entering and exiting in a similar manner with each trade? Or are you winging it and trading with your emotions and doing something different with every trade? I'm here to remind you that you get to decide how you trade. And if you don't have an objective, straightforward, duplicatable way of identifying qualified trade setups with high probability outcomes, of how and when and where you enter, and how you exit your trades, both in profit and loss. If you don't have all of those things lined out and documented and known in advance of ever entering a trade, then consistent results over time will be very hard to achieve, especially during a recession. Having a well-documented trade plan will allow you to be able to track your operational excellence over time, optimize your trading strategy, and get better results over time, even during a recession. So, a quick recap here of those top 3 tips I shared. Ultimately, focus on what you can control, specifically control what you trade, control how much you risk, and control how you trade. Thank you for watching this presentation, and I hope you enjoyed it. Let's be sure to connect after this. You can check out my website and learn more about my book at www.tradefocused.com. We can also connect on my Facebook page at facebook.com/Valerie Fox fan. And you're also welcome to email me at support@tradefocused.com if you have any questions or want to connect more one-on-one. Thanks again for your time. I'm wishing you all the best in your trading journey, and I'd be honored to help you if you're looking to achieve better results. Don't hesitate to reach out. Thanks, and have a great day.